Just one single candlestick pattern helped me to identify a selling imbalance and predict a massive sell-off on a pound-yen pair. In this video, you will learn one of the most accurate candlesticks that I use for trading Forex. I will explain the psychology and meaning of this pattern and show you how to find it easily. Like this video, subscribe to my YouTube channel and empower your SMC trading. Let's start with discussing a bearish model of this candlestick pattern. It will be strictly based on 3 consecutive candlesticks. The first one should be a normal bullish candle with an average sized body and relatively small wicks. It will signify a healthy bullish sentiment on the market. The second candlestick should be a wick bullish or bearish candle or doji. It can also be a pin bar with a long upper wick. Such a candle should strictly form after a test of a liquidity supply zone. This candlestick will be very significant. It will signify the absorption of buying orders by the sellers, by the selling orders that are placed within this supply zone. Also remember that the positioning of a supply zone can be different. The upper wick can go beyond the liquidity zone, confirming a liquidity grab or a trap, or the upper wick can just stay within a liquidity zone. The third candle should be a strong bearish candlestick with a big body. The body of this candlestick should engulf the entire range of the first bullish candle. So it means that this bearish candle should close at least on the level of the lower wick or even lower. Such a candlestick pattern will signify a strong selling imbalance, and it will confirm a change of the market sentiment from bullish to bearish, and the further bearish continuation will be expected then. Please study the example. You can see that euro dollar was giving up on 30 minutes time frame and the market sentiment was strongly bullish. Then the market reached a strong liquidity supply zone, and after a test of that, the market formed a wick bullish candle. After that, we see a formation of a bearish imbalance candle that engulfed the entire body of this bullish candle. These 3 consecutive candlesticks composed a candlestick pattern that confirmed a selling imbalance and the change of the market sentiment. And you can see how significantly the price dropped then. To trade this pattern, simply wait for a bearish imbalance candle to close, engulfing the entire range of the first bullish candle. Open a sell position immediately then. Your stop loss should lie above the highs of this candlestick pattern, and your take profit will be based on the closest strong liquidity demand zone. And here's the second example. You can see that pound Aussie pair was rising sharply and the market tested a significant supply zone. After a test of that supply zone, we see a formation of a doji candle with a long upper wick, and after that the price formed a strong bearish candle that engulfed the entire range of this bullish candle. These 3 candlesticks composed a bearish imbalance pattern, and you can see that the price dropped strongly then. By the way, I will explain the trade execution for that pattern later on, so keep watching. Now let's study a bullish model. It should also be based on 3 consecutive candlesticks. The first one should be a normal bearish candle with the average sized body and relatively small wicks. It will signify a bearish sentiment on the market. The second candle should be a wick bullish bearish candle or doji. It can also be a pin bar with the long lower wick. Such a candle should strictly form after a test of a liquidity demand zone. A formation of such a candle will signify an absorption of the selling orders by the buyers, by the buying orders that are placed within a liquidity demand zone. A lower wick of the second candlestick in this candlestick pattern can also go beyond a liquidity zone. In such a case, it will simply signify a bearish trap and a liquidity grab. The third candle should be a strong bullish candlestick with a big body. The body of this candlestick should engulf the entire range of the first bearish candle. candle, meaning that this candle should close at least on the level of the upper wick of the first candlestick, or it should close above that. Such a candlestick pattern will signify a strong buying imbalance and will confirm a change of the market sentiment. A bullish continuation will be expected then. Please study this setup on Aussie New Zealand pair on a 4-hour time frame. What is so unique about this bullish imbalance setup is that the market tested a liquidity demand zone with the first candlestick. Wick candle was formed beyond that liquidity zone. Such a pattern is also valid, and the fact that the price formed a strong bullish imbalance candle then engulfing the entire range of this bearish candle confirmed a bullish imbalance and a bullish continuation. To trade this pattern, simply wait for a bullish imbalance candle to close, engulfing the entire range of the first bearish candle. Open a buy position immediately then, setting your stop loss below the lows of this candlestick. Your take profit will be the closest strong liquidity supply zone. That is how I treated the setup on Euro Swiss pair. You can see that the market was strongly bearish and the price reached a significant liquidity demand zone. A bearish candle was formed, and after that the price went below that liquidity zone with a liquidity grab. The market formed a pin bar pattern. After that we see a formation of a strong bullish imbalance candle. This candle engulfed the entire range of this bearish candle, and that was a perfect signal to buy the market. Bullish imbalance was confirmed, and after that I was expecting a bullish movement to the closest strong supply zone. Stop loss was set below the lows, and you can see how nicely the market bounced. Using this candlestick pattern, I made more than 90 pips trading pound yen. And this powerful candlestick can be observed on any market and on any time frame. It can be used for day trading, scalping, or swing trading. Being very rare, it provides very profitable trading opportunities. Learn to identify that following the rules that I described. It will be the best imbalance confirmation for trading SMC. Let me know, traders, in the comment section if you have any questions. Learn smart money concepts SMC with my book. You will find the link to that in the description below. This book is also available on Amazon. Also, traders, please watch my other videos.